Hey guys, it's Dave. Welcome back to the channel. Thank you so much for watching as always. Today I have a very important video for you. I know stuff like watching rocket launches and debating which rocket is the best for various reasons is a lot of fun, and diving into spreadsheets and numbers and calculations is probably a little bit less fun for most of us. But if you're an investor in Rocket Lab and not just a fan, it really all does come down to the valuation and the numbers. You can't just invest in the company on the basis of thinking rockets are cool. So today, what we're doing is we're basically combining all of our research, all the updates we've gotten from the company through the various earnings calls and conference calls and, everything we've learned about it over the past, year plus, and plugging that into our valuation model, or at least my valuation model, to tell me how much I think the company could be worth in the future and whether it's a good investment, whether I should keep buying more, etc. So very important to do your due diligence on this one, and I really do think even though it is a spreadsheet, a lot of it is also extremely important for investors at least. So before we dive into that, since I am sharing all my research with you guys for free in real time, I do hope you will consider subscribing if you haven't already, and maybe even becoming a channel member if you really want to help out the community. I can assure you that the amount of time I spend on the channel, I do get paid for it now on YouTube ad revenue, but it's definitely well below minimum wage. Still a very small channel and still growing. So yeah, any help is appreciated, especially the easiest thing you can do is just subscribe if you haven't already. Okay, so with that out of the way, we did just have the Q4 earnings call for 2023 for Rocket Lab, and we've got updated numbers, final numbers for 2023, and this is what I was really waiting for before I go through and update my spreadsheets and how much I think they could be making in profits in the future and how much they're going to be worth. So let's dive in. Okay guys, so what we're looking at right now is my spreadsheet as it was the last time I updated it, which I think was sometime mid-2023. Obviously a lot has changed since then. We've gotten a lot of new information from the company. We had a capital raise. We had some updates on neutrons, updates on number of launches and things like that. And obviously the final numbers came in for 2023. So there's a lot of updates to do and changes to make in terms of how we think this is going to play out in the future for the company. So before we dive into some of the valuation numbers, first I just want to talk revenues and what I'm thinking about for how much money they're going to be making over the next few years. Starting off with the Electron line of business, launch. We did already have 22 launches listed for 2024 because they had provided that as a guidance earlier. So I did already have that plugged in here. But a couple new pieces of information we did get from a conference call with Adam Spice just recently. I'll try to pull up the quote right now. But basically, he went ahead and told us that they're thinking Electron launches could go up to as much as the mid-30s per year in the future, and like a few years down the line.
We think that we've never designed our business plan to need to launch weekly. We've modeled out over the next several years where we think that can get into kind of the mid-30s type of launches per year. We think the market is plenty robust to support that, particularly as we've seen competition just pretty much evaporate, right? Yeah. And we had competition like the Astras and the Virgin Orbits and the relativities of the world and ABLs.
Before this, I wasn't really sure. They talked a lot about 24 launches, and they didn't really give it much guidance past that. So I wasn't sure where to put Electron growth, and I just kind of leveled it out in the mid-20s, which they said would be enough to get them around a mid-50% gross margin number, which is a pretty good gross margin number anyways. But now we have a number that he thinks they're going to get to the mid-30s for launches on Electrons. That's maybe 35 launches eventually. I don't want to just say 2025 it's going to be 35. I'm going to predict a bit more of a gradual increase on this. So what I think I'm going to do is leave for 2025, 24 launches, so that's 2 more than 2024. I try to be pretty conservative with these estimates, so if there is a miss, hopefully Rocket Lab beats my estimate as opposed to me estimating too high, because, you know, I'd rather be pleasantly surprised than be upset that, you know, they missed my estimate or really I miss. So I don't want to think, oh, Rocket Lab is going to 10x when really it's not. I'd rather think, oh, Rocket Lab's going to 5x and then be surprised if it does 10x down the line, if that makes sense to you. So I'm going to go with 22 and then 24 and then 28 launches. And by the way, I decided to do these updates in real time so we can go through them together and you can get a sense of how things change. And if you wanted to make a copy, you have to join the Discord and you can, you know, participate in the discussion with us and make your own changes based on what you think is going to happen in the future. Okay, so 28, then I'm thinking 30 launches 2027, then maybe 32, and then 35. Now, this gets us to our 35 number for mid-30s, like he did say, and it's very modest growth, right? Like, so we're seeing 10 to 22 already. That's more than a double. So I may be playing it way too safe here. They may end up going from 22 to 28 to 32 to 35 all the way in 2027. I may be on the low side, just playing it safe, but let me know your opinion down in the comments below with any of the numbers I do pick out here. I'm interested to hear other opinions. So obviously that changes the amount of income that they will get from the Electron line of business. But there was also another interesting point in the recent conference call where he talked about average selling prices on Electron and talked about how they're already for their current Electron backlog looking at ASPs of more like 8.1 or something like that. So already higher than that 7.5 number. I have 7.5 average selling price, that's million per launch in 2024, and then 8, 9, just kind of slowly rising kind of with inflation and costs and things like that. Things generally do increase in price, but I think this deserves a bit of a bump if they're already at an average selling price of something like 8.1. 2025 only having 8 seems a little low. So still being pretty safe here, but I'm going to say this is going to be 8.3 per launch, and you can see the math automatically changes, so the revenue numbers automatically increase. Then we're going 9, 9.3. I'm thinking maybe 9.8, adjusting these just a little bit per launch, the amount they're making. And I'm going to go up to 10 in 2029. I think that's pretty fair. That brings revenue from Electron to 350 million in 2029, which is way out, I know, but I like to plan far out in the future. So then we're talking gross profit on Electron, how much, you know, they're taking to the bottom line from each launch, subtracting, you know, cost of goods sold basically is the term. They have said that when they hit 24-ish launches per year, that's when they think they can get to a mid 50%-ish gross margin. So you know, gradually increasing it. I'm thinking this might take longer now, though, because we're not getting a reused launch vehicle this year. They're kind of pushing back reusability a little bit, which I feel like could hurt the bottom line on Electron. If you don't think so, I mean, you can put in your own number to the calculation and figure out what you think. But I'm going to lower this a little bit. So I'm going to say in 2025, only maybe 42% gross margin, which is still fine, lower than what I had based on, you know, some more work to be done on reusability and that not really taking off. So 42% gross margin, and then, yeah, maybe 50. And then maybe 55 as that cadence pushes beyond the 24 number. That should make gross margins even better. Then let's go 58. and 60, hitting a 60% gross margin for launch. Maybe that's too high. Maybe competition will come in, but I just feel like right now, in terms of other small launchers, there's nobody really around. Hopefully with reusability, with a cadence pushing 35, that's doable as they amortize those fixed costs on the launch infrastructure across more launches. So that's Electron down. We've kind of got our revenue estimates going out several years for Electron. Now let's talk Neutron. They say, you know, there's a chance they're going to have a launch in 2024. I put the odds of that at maybe 20% or less, to be honest with you. So I'm going to estimate no launches for Neutron in 2024. Then they have said in several earnings calls that Neutron is going to take a similar path that Electron took in terms of ramping up that Neutron cadence. So they're not going to be able to go from like 1 to 50 launches per year. That's just not reasonable to expect. So a couple different quotes we had recently that made things a little bit more confusing though. In the recent earnings call we just had, Peter said that we're looking at maybe 1 launch the first year and then maybe 3 and then maybe 5 as kind of a growth rate for Neutron. But in a recent conference, maybe a couple weeks ago, Adam Spice, the CFO of the company, said something a little different. What he said is maybe 1 launch and then 3 launches and then 8 launches. So, you know, who is right? Is Peter sandbagging and trying to lowball it so they don't miss? Is Adam kind of wrong and maybe a little bit too high? Hard to say. What I'm thinking is that if they get that first launch off in 2025, say it's maybe early 2025, I had 4 launches. They say 3 for the second year. I'll put 3 for 2026. We're trying to be safe in this valuation. 2027, maybe 6. Since that's kind of a bit of a midpoint between what Peter said and what Adam said. Obviously, Neutron brings in a lot more revenue per launch than Electron, so even a 1 launch difference can make a huge effect on the bottom line. 2028, I think I'm going to keep it as 11. I think that's a reasonable growth ramp from 6 to 11 if we look at how Electron grew historically. Once they get a few years under their belt, they seem to really be able to ramp it up. And then 16, 2029, maybe that's still reasonable. I think I'll leave that in there as well. Let me know what you guys think. In terms of revenue per launch, so we're starting off with 50 million in revenue per launch. You know what? The first launch might even be discounted because it's high risk, but I guess I'll leave in 50 there. Then maybe I'll go up to 55 per launch. Let's say 56, because I think, you know, the market's kind of firming up, and I think these numbers are very reasonable. 60 million per launch in 2029 with inflation and just, yeah, everything, prices always go up, as I'm sure you guys know as well in your own lives. So that gives us revenue numbers for Neutron, and you can see like how massively this scales, because 16 launches at 60 million, that's a lot of money here. That's almost $1 billion. So Neutron, a big revenue lever, but it's not really starting to turn just yet. Then we're talking gross margins on Neutron. So I do think, you know, obviously when you have just a few launches, gross margins are going to be rough, and then they get better as you scale. We've seen that with Electron. So I'm putting negative 50% gross margin here. They're losing money on that first year, but this calculation is wrong. So what it should be is Okay, so I did just adjust my formulas there to make it calculate properly. We do have a loss of $25 million on Neutron when they're only launching once. The gross margins are going to improve in my model with 3 launches, but still not enough cadence and scale to get profitable. So we're saying negative 15% in 2026. And then I'm thinking, let's go positive 15%. I think it's okay to bump it a little bit with 6 launches. And then, yeah, 35 and 42 I think is pretty reasonable. They have said long term they expect Neutron to have a similar margin profile as Electron. So those are our launches, those are our margins, and basically multiplying it out, you get Neutron turning a profit in 2027, and obviously the profits get much larger as the cadence gets bigger and the gross margins get better. Now, we have Neutron, we have Electron, that gives us all of launch. What we need now is space systems. This one's a little bit more challenging to estimate, but we did get some interesting information over the past few months from Adam Spice. So what he did say was that their backlog right now is $1.045 billion, or 0.6, I think. So just over $1 billion in backlog across the entire company. They also said that they expect 41% of that backlog to be recognized in 2024. So that would equate to $460 million in revenue for the company in 2024. That's kind of the point I'm sitting at. Of course, they could sign new contracts and execute on them during the year, meaning that this is not the final revenue number for the entire company, but that's really the baseline I have. So let's say $460 million on the year in revenue. We know there's planned to be 22 launches for Electron. We can say the average selling price is maybe 7.8 million is reasonable as it kind of starts to rise. So if you calculate out 22 launches times that average selling price and then subtract it from the 460 million, what's left should be the revenue for Space Systems. So basically we need to get the total revenue to 460 million, and we know what launch should be, so the remaining should be Space Systems. Therefore, we're actually bumping the Space Systems revenue in 2024 from $226 million to $295 million. You can see that that sum, but with the 295 plus launch, will add up to 460. So now that we have 2024 revenue estimate, and again, this might be off if they add customers, add sales throughout the year and deliver those products during the year, something that I feel like should be very possible for their merchant products like reaction wheels, star trackers, all the rest. Anyway, but that's what we're going with. Now we have to figure out growth on Space Systems. This one we don't have as good a handle on in terms of, you know, we can guess launch numbers. We don't really have anything like that for Space Systems. So I'm just applying a regular kind of growth curve for the company. Space Systems has been growing very strongly over the past few years. It's really kind of the juggernaut of the company that's really driving growth. I'm giving them a 1.3 multiple or 30% increase per year on Space Systems growth. This may be a little conservative, it may be aggressive, let me know. That's actually less than they have been growing on the Space Systems line of business. So I feel like it's pretty safe, but again, we can always change these numbers and see what the results come out to. So if we multiply that by 1.3 or increasing by 30% per year, we can go 383 million, then almost 500 million, then almost 650 million, and then 842 million. 2029 brings you to over $1 billion in Space Systems revenue. Talking margins on that revenue and how much will, you know, minusing cost of goods sold and all the rest. That should increase as well with scale. We're expecting Space Systems to kind of approach launch type revenue, perhaps not quite there. So I'm thinking 40%, maybe 40, let's increase this a little bit, 42%, 45, 45, 50, 50. We're getting to 50% gross margin on the business. Again, we can adjust that as we see fit. The calculations automatically change, and those are the numbers we end up with for revenue. So calculating the total, we do have the numbers being added along the bottom. And you can see they start to get quite large, right? Where we're talking like $1.7 billion in 2028. Pretty exciting stuff, but again, that's revenue, and we still have to think about all their spending and R&D and all that. So we're very far from being done. Sorry if you're finding the spreadsheets a little less exciting, but at least now we have our revenue numbers and our margin numbers. Now let's go over to the valuation tab and see if we can plug these in and update how much the company is going to be worth. So we do have the final 2023 numbers. They did make $244 million, which to be honest is not that great. That represents a 1.16 or 16% growth over 2022. So the growth in 2023 actually is fine. Don't get me wrong, like 16% is pretty good, but for a company that's not yet profitable, a growth company, maybe it's a little on the low side. We do know, though, from the numbers we just went through, that the revenue growth should really pick up over the next few years. So let's take a look at that. What we had for 2024, if you'll recall, is $460 million. Now, we do need to think about cost of goods sold, SG&A, R&D expenses. Something else very important Adam Spice has said multiple times in various earning calls is that he expects the EBITDA profile of the company to stay roughly the same in 2024, meaning they're probably going to burn about the same amount of money in 2024 as they did in 2023. So we know our revenues. That means we have to make the rest of these numbers line up so that the EBITDA is roughly the same for 2024 as it was in 2023. Oh, and by the way, this number was what I had estimated. We're actually slightly different. So the real number is 177,918. So, and that's a negative. So we have negative 177,918 million, and we want to end up with this revenue figure as the same. And this is because although the business is growing and they're making more money, all that money is being funneled directly onto Neutron, and it's just burning all the capital. So 2024 investment year, they call it a growth year, and that they're investing for the future, which is why there's a decent chance the stock does not, take off in 2024. Wall Street loves profits, and the profits are not going to improve at all in 2024, unfortunately, or if you're still in accumulating mode for your shares, fortunately. Okay, so we have our revenue number from the previous slide. How much is cost of goods sold? That's basically the inverse of the gross margins we already thought about. So how much are they spending to make that? So I'm going to pop up a image from the earnings call showing how their margins are looking right now. I'm going to put it at about 28% gross margins, meaning I'm multiplying that number by 0.72 to land on the cost of goods sold figure of $331 million. The remainder of that being, what they land with on the bottom line. But they still have to pay for selling, general, and admin, as well as R&D expenses, which is going to be big for Neutron this year, before we can figure out, how much they end up with at the end of the day. So we know now from what Adam said, we're looking at 177-ish million this year as well for EBITDA losses, because it's going to be pretty much similar. And what I calculated was to get the R&D to make that math work, we're looking at about $176 million in terms of R&D expenses. And you can see that lines up pretty nicely on the bottom line. The EBITDA, earnings before interest, depreciation, amortization, also $177 million in the negative. Now, for 2023, this negative earnings number was wrong, so it's actually good because they burned less money than that. It's actually 182,575 1. That's how much money they burned, total net income. I'm going to put this pretty much the same since the EBITDA was about the same. I'm just going to do, you know what, 182,571 for simplicity's sake. Let's just make it the exact same. It won't be the exact same, but it should be in the same ballpark. So now we have a net income number for 2024. Okay, so that's 2024 fully done. You can see EBITDA about the same as they're just spending a shit ton on Neutron, and that spending is eating up all the gains the rest of their business is doing. Let's go through the rest of these years now. So, top line, 2025. The real number, what I previously had estimated, was 587. Now, going by the numbers on the previous chart, our estimate actually goes up to 632 or $632 million. I'm just going to go through and do all the revenue numbers first. Next is $915 million. Now we're getting close to that billion-dollar mark. 2027, we have $1.263 billion. That makes 2027 the first billion-dollar revenue year. 2028, the final year I'm going to bother doing this because I like to go 5 years out, would be 1.794. Now you can see all these numbers are rising because basically they've been doing better than expected, and yeah, I have to increase the revenue estimates based on the numbers they've been giving us. So 1,794, 1, 2, 3. So a good sign that the top line revenue numbers are higher than I thought, or at least it's looking like the stagger effect is going to be higher. Now I am thinking cost of goods sold might be a little higher than I was originally expecting, so I'm going to change this number from 62 to 64%. 2026, I think, 40% is fair, and then maybe 5.8 is still pretty good, 0.55. I think that's still pretty good, really. So going to keep those numbers the same. Now, 2025, this is interesting. Adam Spice kind of said that's when they peak spend on Neutron. They're cresting the wave is when the first launch happens. So I'm actually going to go ahead and predict a bit of a decline in R&D as Neutron comes online, and it's no longer like an R&D project quite as much. So I'm reducing the R&D expense by 15%, and then other than that, what we're doing is we're just kind of estimating a gradual regular increase in the SG&A expense line as well as R&D. So we're looking at 15% increase, maybe 5% increase, 5%, 10%, 10%. Yeah, just kind of regular growth, inflation, hiring more people, all that for those other lines. So you make the calculations, you do revenue minus the cost of goods sold, minus the SG&A, minus R&D, and we still have EBITDA being negative in 2025, but it's really moving in the right direction at this point, only negative 58, and then it turns positive in 2026. Now, Adam did say they turned the corner on profitability around probably mid-2025. I don't think that means being profitable mid-2025 like a lot of people did think. That's just kind of turning the corner and like getting there. And then they have clear line of sight to it. So that's kind of where I am on this. Net income, they don't burn nearly as much money in 2025. Then again, they turn positive in 2026. 2027, the earnings get even better. And 2028, we're talking $400 million net income, which is basically profits. Now that we have that, we do have a few more things left to do. Yeah, I know this is complicated and probably a lot of you won't be interested in watching to the end, but earnings in 2028 are not worth earnings today. You have to discount it. You have to take into account risk factors. You have to take into account inflation, interest rates, all that. And you basically put in a discount rate or a WACC for weighted average cost of capital for how much you're going to take off that each year to bring it back to today's value. So I put in a 15% figure, meaning I kind of reduce the value of the earnings for 15% each year they are in the future to land on what the value should be today. The other thing to think about is outstanding shares for the company, how many pieces the pie of the company is sliced into. So we did have these numbers already talking about $498 million or 498 million shares around there. But we also did have, as you're all probably aware, a capital raise recently with a capped call transaction. And I'm not going to claim that I'm a complete expert on capped calls yet, because to be honest, I still find the structure quite confusing, but Rocket Lab did release this chart, which should hopefully help, showing, potential dilution rates at different share prices at maturity. So I'm just going to take one of the higher on the end of the range in terms of dilution numbers. As at least on this chart, we can see we have like an 18 million share count being depending on where the share price is. That's what I'm going to go with. So, and then the maturity can differ as well. Like it may not even mature by this point, but I do want to take it into account. So I'm going to go ahead and add in 2028 an extra 18 million shares issued. So we're going to put in 18 million plus the rest, which is, I already had some pretty standard like stock-based compensation increases year over year, as that does tend to happen, plus that 18 million. So that would take us up to more of a 560 million shares outstanding in 2028. Okay, we're almost there. In 2028 now, we have a net income of 400,445,000. We have a outstanding share count of 560 million shares, and we can do the math on that. So, dividing those numbers and then multiplying it by the price to earnings you think Rocket Lab will command in 2028 will get you the terminal value at that point, the value of those shares. So for example here, just to illustrate it, we can do J13, which is the net income, divided by the outstanding shares, which is J18. And we have a number of about 71 cents. Now, multiply that by a price to earnings. What is a fair price to earnings for the company? Well, if we look at the top line in terms of growth, what we end up with is about 88%. We end up with 88% 2024, 37% 2025, 45%, 38%, and 42%. That's some pretty solid growth numbers, right? Especially this 88, like that's massive. Obviously, we're going off a bit of a slow growth year, but this is some pretty impressive growth. So what kind of a price to earnings will investors value that at? Aerospace industry average is apparently around 33, according to Simply Wall Street, and a few other sites I checked was in that area. I don't think Northrop Grumman and Boeing are very good comparisons. Maxar's not bad. It was trading while it was public. I mean, it was all over the place, but it was around 30 at many times. If you want to get really crazy, you can think of like a Palantir, which in its situation today is kind of similar in the sense that it just got profitable. So they're all the way up right now. I know this is wild and I'm not going to use it as the actual number, but they're up at 227 price to earnings ratio, which is extremely high. Now, a comparison I think is very good is MDA, who you might be familiar with because Rocket Lab is working with them on the Globalstar contract. They also deal with manufacturing satellites. They're already profitable, not quite growing as fast as Rocket Lab, but they do have a price to earnings right now of about 40, which I think, you know, Rocket Lab's growing even faster than them. I think that's a pretty fair comparison. You could also say, if you want to look at the low end, a Lockheed Martin. Personally, I don't think this is a very good comparison because they're a very big, mature company, not growing as fast. They have a price to earnings of about 15.47. So we're multiplying these numbers out, and you get $27 per share stock price in 2028. I think that's pretty good. I know a lot of you people, I know a lot of people out there maybe just kind of expect or hope for like insane returns, like 100x's all the time. But if you think about what this means, our current share price is 4.5, right? 27 divided by 4.5, that's a 6x. That's 6 times your money in 5 years, if this is how it would play out. That's a really good return for any investor. So it's not 100x, I know. I think a 6x is nothing to scoff at. And then what you do is you take back the, again, 15% each year to get to today's value, and I land with a value today of about $12 per share based on these assumptions. A lot of other variables can obviously come into play. The market is not always logical. Things can change. Like, let's say, for example, things do go crazy. Mass exuberance hits as the growth is exciting. They are profitable. Let's just say there's a 80 price to earnings. Now we're talking $57 per share. 57 divided by 4.5. Out of curiosity, that's a 12.5x. That is absolutely amazing. So I think, you know, it's a pretty exciting company. Is it going to 100x? No, I don't think so. Is it even going to 12.6x? I don't think that is justified in the numbers, and believe me, no one would love them to 12.6x more than me. Well, maybe Peter Beck would. But yeah, so all these numbers can be changed, obviously, to reflect what you think. If you want to give them a price to earnings of only 20, I don't think that's very fair given the growth we're looking at, but that would give them a value of 14 in 2028, which is still a pretty decent return for a $4.5 per share. Yeah, that's still not a bad compounded return if you look at the annual return rate. Now, those are the spreadsheets, and if you did make it through this far, congratulations. I know it's been a little long and complicated, but thank you for sticking with me. I do think it's important in terms of having an investment thesis to really do all the numbers yourself. There are some very big other factors that we haven't talked about, though, which could be extremely important. So let's talk about that. So a couple things to think about before we wrap up. Number one is the acquisition or acquisitions we're talking about. They just raised some capital for, and they're planning to acquire. Now, those companies could very possibly be already cash flow positive, meaning that they would be accretive to the bottom line and actually improve the numbers, improve the situation, although the balance sheet would have, you know, less cash on it than it does today. And another, probably more important, probably even the biggest factor to think about that I didn't go into here is that I don't have enough information yet to even start modeling out space applications, which is where they own and operate their own satellites, similar to a SpaceX Starlink type situation, but it could be some kind of other application, maybe like back channel, or, you know, it could be anything at this point. So if they decide to do that and they actually start doing it by, say, 2028, that could throw things all out of whack, because instead of selling the launches and getting the revenue up front, building a satellite, selling the satellite, getting it up front, instead they're spending all that money to build their satellites, launch their satellites, and then the money will start to trickle in gradually, like recurring monthly over time. So over the long run, this model is actually very profitable and, you know, much better for Rocket Lab. But over the short term, basically, they would be building out their own satellites, launching their own satellites, not getting paid for any of that until their constellation's built out to the point where they start charging customers, and then they recoup their investment and start making money. So none of that is modeled in, and if they do start making that kind of a big spend in the future, which we know they do want to, is it possible that all their profits go into that and it pushes out profitability? So the top line revenue number is growing, and then we're getting this recurring revenue number, which is great, but perhaps profitability gets pushed out even further, and that is something we all know Wall Street loves. But the other thing Wall Street does love is subscription-based recurring revenue, which this satellite constellation would provide. So that would throw a wrench into all the numbers, and, you know, things could change dramatically for the better, or I think definitely in the long run for the better, the growth trajectory of the company for the better. But short term, again, it's like Neutron, right? Right now they're spending a ton for the future. So right now it doesn't look good. We could be the same thing in, say, 4 years down the line. They're putting all their money into this constellation, and the stock is still suppressed until all that gets up and running. And I know with Rocket Lab, it's always like waiting, and being patient is very difficult, but that could be just another thing to be patient about. So yeah, that is a big wild card when it comes to Rocket Lab's earnings. So anyway, let me know what you think down in the comments below. Is a $27 per share price target for 2028 reasonable? Do you find that number exciting? Do you find that number disappointing? Do you think any of the assumptions I made or numbers I did use should be changed, either lower or higher? Let me know down in the comments below. Very interested to hear your thoughts, and maybe make some updates of my own depending on what everyone else thinks. Thank you so much for watching. If you did make it to the end, I know it's a long one. I hope you'll consider subscribing if you did find this video useful, and I'll see you in the next video. Bye for now.